Much happening, a quiet day in the market that's coming in. But let me get on board our guests, Rajesh Agarwal, Head of Research, AUM Capital, and Lakshmikant Shukla, who's the Technical Analyst, Institutional Research, Yes Securities, joining us. Hi, good morning to both of you. Thank you so much for joining in. Let me get on board, quickly first, let's take a look at how the market is shaping up. Rajesh, let me come to you. What do you make of this market? A breather coming in from the rally that we saw coming in last week. While, the conditions are very ripe as far as Indian markets are concerned. The dollar is up 100, oil prices are stable. We are again likely to start out with a Q1 earnings. The balance sheets are strong for banks and for corporates. From here on, is this breather a bit of a pause for an up move that you're penciling in?
Good morning, Ankita. Good morning, Ankur. Good morning, Lakshmikant. We believe that going forward, there may be small hiccups here and there in the market due to global setup. I would say there is a lot of uncertainty and noise going on. But at this point of what is required is staying focused on fundamentals and thinking beyond short term, because short term you never know. There are a lot of geopolitical things going on. Uh, Sometimes dollar index goes up, comes down, then again crude price flare up. So these things are all for short term, and this should be ignored at this point of time. Somebody is thinking of a medium to long term investment, because as far as the Indian macroeconomic strength is concerned, I think they are on the strongest phase because low current account deficit is very low. Fiscal deficit is controlled. You have a robust banking system with almost cleaned up balance sheet. NPAs are on a very lower side. Debt to GDP ratio is very low. And in the monetary policy, RBI has opened its tap. It's given rate cuts. It is given liquidity. So everything is in favor. Even the monsoon has come before time. But the best part is crude has been trading in the range of 60 to 70 odd dollars. If you leave apart that 3, 4, 5 days when it went up to $80. And this lower price of crude is a boon for Indian economy as such. So I think in the medium to long term, we are going to do well. I won't be surprised if we are sitting on a 10 to 15% gain in the next 1.5 year or so. So we are very bullish on the market, and we think one should think long term and nibble into good fundamental quality stocks.
So long-term thinking should be what viewers should do. But let's get started with the queries. You know what you have to do in this show. This show is all about answering your stock queries with the help of guests, and both the guests have already arrived. And what you need to do is to message your quantity, which is the stock, and what is your buying or selling price. And you can send your queries on 86579 74571. So please WhatsApp your queries, mention your name, place your sending, and also specify the quantity. But let's get started with the first query of today, and it is coming from hospital sector. Our viewer is asking that they want to put rupees 2 lakh in hospital sector. Which are the stocks one should put in? And also just to mention that Apollo Hospital is something which is leading in the rally today. What is your view, Rajesh? Where should 2 lakh rupees be put in hospital sector?
We have been very bullish on the healthcare sector as such since very long period of time. And after the COVID, if you see that people have moved towards medical insurance, and that's going to help these organized players a lot. Market leader, of course, is Apollo Hospital, and that would be the first pick because with 10,000 beds around 40 cities, they are going for expansion, trying to reduce debt, hive of their pharmacy business. Even the online business is expected to be in green in the near future. Everything is positive for Apollo Hospital, and for a long-term horizon, I think can give good decent return. If somebody is looking for a mid cap or a small cap company in this space, I think global healthcare, the hospital which goes by the name of Medanta, is very strong because of their presence in the northern belt. But they are expanding like anything. The Lucknow hospital has been taken very well. They are opening a new hospital in Bombay also. So these are the two of the top picks from our side in hospital space.
That's the view coming in on the hospital space. Apollo Hospitals. In fact, the big news coming in on Apollo Hospitals. That stock was up in a way 4% today. The board has cleared plans to list its pharmacy and digital health business separately. That is going to unlock a lot of value for Apollo Hospitals. So that's a big news coming in on Apollo Hospitals today. But moving on to the next counter, then Sunita was writing in from Bangalore. She says that she's purchased a TCS, which is 10% of her portfolio, 15 shares at an average price of 3,931, and she's willing to hold it for a long term of 10 years. She would like to know the right price and time to average it. Let me come to you again, Rajesh, about TCS holding it for a period of 10 years. Would you recommend that really?
See, somebody willing to hold a stock like TCS or a Infosys for 10 years time horizon, I think it's a very prudent thing to do. Because despite the fact there are a lot of concerns in the short term because on IT pack as a whole because of all those tariff noise and everything, we believe that IT is going to be there. There might not be that kind of returns which has happened in the past, but at least a decent returns of 12 to 15% CAGR is quite possible. So yes, TCS, Infosys, these are some of the stocks which can be held for a long period of time.
Next query coming in for Polycab, and Lakshmikant, I want to come to you for this question. What is your view on this stock, and what are the levels one should watch out for?
Good morning, Ankur. Good morning, Ankita, and good morning, Rajesh ji. So, coming toward a query about Polycab. So, Polycab has given a breakthrough above the levels of 6,260. Then, after it has started making higher tops and higher bottom, currently it is trading above all its key moving averages. So, we would like to suggest that one should follow the buy on dip strategy in Polycab whenever it comes near the levels of 6,470 to 6,450. I think that would be the good buying levels in terms of risk and reward ratio. And then after one can keep the stop loss of 6,200 in case of any further corrective move. But if we find any reversal candle near the levels, so one can go long and can expect upside move toward the levels of 7,000 to 7,150 June. So that would be the upcoming short-term target for the Polycab in the coming days.
All right, so that's the view coming in for Polycab. Let me get in another question now. Subramaniam, who's writing in from Chennai, he wants to know the short term and the medium term outlook on the below mentioned shares. Bank of Maharashtra, he's holding it. He's holding 120 shares at a buying price of 47 rupees. Lakshmikant, coming to you, this is a short term view. Bank of Maharashtra, now the entire PSU banking pack financials are a common consensus for all the analysts. For a short period of time, what are the levels to watch out for Bank of Maharashtra?
See, in yesterday's session, we have seen good amount of traction in PCU banks, and Maharashtra Bank also given congestion breakout on the upside. Now it is approaching toward its previous swing high of 58. So that would be the expected breakout in this stock. So once it cleared this hurdle of 58, then after we could see further buying momentum in this stock, which could drive it higher toward the levels of 64 to 65 range. So I think he should wait for this breakout, and once it crosses the levels of 58, then he can go to take long this stock for the upside target of 63 to 65 and keep the stop loss of 54 on the downside. As long as it holds this support, we could see upside momentum in Maharashtra Bank toward the levels of 62 to 65 June.
All right, next query coming in from Pune. Anita is asking about KEC and REC. The buying price of KEC is 918 and REC at 425. Rajesh, what will you advise on both these stocks?
Both are a hold, I think, because KEC, as far as KEC goes, the fundamentals are very strong. Order book is very good. The tower business is doing very well, and we believe that in the next 6 to 9 months, this stock can easily cross four figures. So it's a hold from our side. As far as REC is concerned, with the new guidelines of infrastructure financing kicking in, I think these companies are going to do good. NIMs have been improving, asset quality has improved. And the way the kind of demand in power sector and the focus of government in improving power's infrastructure in our country, I think companies like REC, PFC, REDA are going to do well because business is opening up. So both are a hold from our side at this point of time.
A hold call on both KEC and REC. But Rajesh, I'll come to you again for the next query. This is Gautam who's writing from Mumbai. He wants to know, he wants you to suggest one or two Adani Group stocks with the best potential to grow in the next 1 to 2 years time horizon. He wants to know potentially two Adani Group stocks.
See, if I have to suggest two Adani Group stocks at this point of time, I think the first one would be Adani Enterprise, which has a lot of business potential in that. And with talks of a lot of businesses like airports and all being hyped up in a separate company, I think this can give good returns. And the other one would be Adani Ports, with the kind of logistic business going up, the capacity in the port business they have. More, almost all the ports are doing very well, and with a lot of prospects going ahead, I think this also can be bought for a target of maybe 1750 odd rupees in the next 1 year. These are the two of the stocks out of the Adani pack which we can suggest.
All right, with this, it's time to take a quick break, but do keep sending your queries on the numbers which is flashing on the top of the screen, and we'll answer most of your queries after the break.
Welcome back. You tune in to Buy Now Sell Now, where we are getting all your questions answered by our experts. Keep sending in your questions on the number that's flashing on top of the screen. Your stock query, your buying price, and your holding period, and we'll get them answered by our experts. Let's get going yet again then with all the questions. The next question is coming in from Mohan, who's writing from Orissa. He's a retired government employee. He's holding 7 shares of Dixon Tech at a buying price of 15,600 for the past 45 days. He wants to know if he should hold it or should he switch for some other counter. He's willing to hold it for the next 3 months. I believe, Lakshmikant, you should take this question. The holding period is just 3 months. Should he be holding on to Dixon Tech at 15,600 levels, or should he be switching it?
Dixon Tech has seen bottoming out formation near the levels of 13,280, but after this formation, it started moving higher. But when it approaches towards 200 DMA, which is placed around the levels of 15,200, from there it again started seeing profit booking in this stock. So range bound move could be expected. So until we see any decisive move to the levels of 15,200, we would not see any further buying momentum in this stock. Once it able to cross the levels of 15,000 to 15,200, then after we could see acceleration in the buying momentum toward the levels of 16,650 to 17,000 zone. But as if we want to switch, I think he can switch toward the SBI. So we expect multi-month trend line breakout in the SBI above the levels of 825 to 835 zone, and from where we could see upside move in this stock toward the levels of 900 to 920 zone by keeping the stop loss of 770 on the downside. So SBI is the comparatively strong bet if we compare it from the Dixon.
All right, and 70 years completion of SBI 2 since inception. We have a next question from Avanti. The question is on Avanti Feeds, and it has been asked by Girish Iyer from Trivandrum, asking that he has 1,000 shares. The buying price is 857. What is the short-term scope of the scrip? Lakshmikant, you can attempt to answer.
Avanti feed has formed respite near its 200 DMA, which is placed around the levels of 710 to 715. So I think that would be the immediate support for this stock. Holding above this, we could see upside momentum in this stock, but breakout is expected of the levels of 750 to 760 zone. After clearing this hurdle, it would resume its upside momentum toward the levels of 790 to 820 zone. So I think it should wait for this breakout of the levels of 810 and by keeping the stop loss of 700 on the downside.
All right, so that's the word coming in on Avanti Feeds. This question is coming in from they have not given the name, but they say they're a big Satya. He's writing in. He says he's a big fan of Kunal. Kunal is not there in the show today, But we will convey that message. He's writing in from Visakhapatnam. He's purchased CAMS and Coforge. He wants to know if it's good and it's safe. Safe entry levels. He wants to know if he can purchase CAMS and Coforge. Lakshmikant, let me come to you for the entry levels. Coforge has done quite well for itself, and CAMS. What are the entry levels to watch out for these counters?
About Coforge, so Coforge has given upside breakout from the levels of 1895, and then after we have seen significant upside move. Even at current levels, it is looking good, so one can go long around the zone of 1930 to 920. So that would be the buying levels for the Coforge by keeping the stop loss of 1805 on the downside, and once it surpasses its upcoming hurdle of 2005, then after could see bullish momentum in this stock toward the levels of 2350 to 2350 to 2400 zone.
Right,
Now
next.
talking about camps, so camps is also seen a significant upside move, but now it is approaching toward its previous swing high of 4,400 to 4,450 zone. So I think that would be the upcoming resistance for the camps. So once it taken out this level, then after it could also move higher toward the levels of 4,950 to 5,000 zone, while on the downside, the 3,900 could act as the key support levels for this stock.
All right, that's a view on CAMS and Coforge. But moving on, next query again from healthcare space. A lot of traction there since Apollo Hospital is up today. The query is about Max Healthcare. 50 shares of Max Healthcare bought at 1,218. The name is not mentioned in the query. So what should be the near-term target? First, I want to check your view on this space, Rajesh. We have already discussed one stock, but would you also recommend on Max Healthcare, and then I'll come for a technical check to you, Lakshmikant.
Yes, of course, the company has been doing very well. The numbers in the last few quarters has been improving, and they are also expanding. And I think it is one of the other play which we have already to mentioned in our discussion. This can also be held for a medium to long term.
All right, Lakshmikant, what is your technical check saying on Max Healthcare?
See, this stock has been trending higher in the uncharted territory after giving significant upside move the levels of 1300, and then after this stock has not formed any reversal kind of pattern even on the daily and on the weekly chart. So we could expect that this ongoing momentum will continue to move higher. Now upcoming pivot levels stand near the levels of 1720, so that would be the short term target for the MFSL with the stop loss of 1610 on the downside.
All right, moving on then to the next counter. Arvind is writing in from Chennai. He has 33 shares of KPIT Tech at a buying price of 1,264 rupees. Is it advisable to hold this share for the next 1 month, or should he exit and look at some other promising counter? 1 month view, probably Lakshmikant should take this question. Now, for the next month, KPIT Tech, what are the levels to watch out for? Or do you suggest cashing out on this one and probably entering another counter?
See, KPIT has given a breakdown from the levels of 1300, and then after we have seen the formation of lower tops and lower bottom with the formation of multiple bearish candle. Now it is started trading below all its key moving averages. So overall sentiment is on the bearish side. So I think one should exit from this stock as soon as it possible. We won't see any upside move until it get breakthrough the levels of 1305. So that would be the key resistance. So I think apart from this, beside this stock, one can go long in SCL Tech. So it is forming a strong base near the levels of 1690 to 680 zone, and we expect that once it crosses the levels of 1755, which is immediate hurdle, then after we could see strong buying momentum in this stock, which could drive it higher toward the levels of 1830. While buying this stock, one can keep the stop loss of 1660 on the downside, so that would be the strong support, and one could wait for the upside breakout at the levels of 1755. So I think SCL Tech would be the good bet if we compare from the KPIT Tech.
All right, that's a view coming in from Lakshmikant. But moving on, next query is from real estate space. We have Sambasiv Rao, who is writing from Vijayawada, Andhra Pradesh. He wants to know about two stocks specifically. One is DLF, one and another one Macrotech developers. What is the advice, Rajesh, you will give for next 2 to 3 years, because that is the holding period he has specified?
Realty as a space has been doing very well in the recent past. A lot of companies have reduced their debt, the inventory levels have gone down, new projects have been announced, and we have recently come across news that uh, a premium project of DLF was sold out within minutes of its launch. So that's the kind of traction which we are witnessing in the entire realty space as such. As far as these two companies are considered, I think both can be considered for a long-term horizon. DLF, since a lot of the new projects has been launched and the debt has been reduced, this can be held for a long term. And Lodha, which has been doing very well in the MMR region, has a lot of projects going ahead. But I would like to make it clear to retail investors as such, because realty as a pack has a lot of inherent risk associated with that because of inventory, interest rates, and all those things going forward. So one should be very cautious in this space and have a track of a monthly track, a quarterly track of updates and all. But at this point of time, these two companies are looking good. One can hold for long term.
All right, holding it for a longer period of time is the word coming in on that. But let me come to the next counter, which is Mannapuram Finance. Neelam from Jaipur is writing in. She wants to know that she's making a 40% profit on Mannapuram Finance. There's no question, but I believe what she wants to know is whether she should book out profits or further upside seen on that. Let me come to Lakshmikant for this.
This stock is trending higher from last few weeks after making higher tops and higher bottom. Now it is consolidating near its previous swing high of 284 to 285 zone. So I think she should wait for the breakout. Once it crosses the levels of 285, then after we could see a significant upside move toward the levels of 300. So that would be our expected target also. So if it already, I think I would like to suggest the stop loss toward the levels of 260, which its immediate support. So holding above this level, we could see upside move in this stock, and once it given congestion breakout above the levels of 285, then 295 or to 300 would be the upcoming target for this stock where she can book profit.
All right, with this, it's time to take a quick break, but keep sending your queries on the numbers flashing on the top of your screen.
All right, welcome back to Buy Now Sell Now. We are getting all your questions answered. Keep sending in your questions on the number that's flashing on top of your screen, and we'll get them answered by our experts. So let's resume then with all your questions. This is Sonu who's writing from Bangalore. He says that this one is for Rajesh specifically. He's mentioned he's invested 500 shares in LIC Housing at an average price of 660 for close to a year. It is staying under 600, around 600 for a very long time as far as the stock price is concerned. Is it, he wants to know comparatively, is PNB Housing a better bet? Do you see any hope of LIC Housing moving any further, or should he move to a different stock now from LIC Housing?
Holder, willing to wait for maybe 12 to 18 months, I think LIC is the best play. It's the largest housing finance company, have a good parentage of LIC with it, so the fund costs are very low. And IMs are good. They have been giving out loans not only to home buyers but also into promoter funding also. And the portfolio is very good. Even this quarter numbers were very strong, I would say. And advances went up by advances and disbursement both went up. And if you talk of valuation, it trading at less than 7 times its earning FY27. So I think it's not only a hold, it's a buy at these levels. One can even buy. As far as other stock concerned in this space, I think Housing Finance fits the bill rather than PNB Housing. These two stocks can be bought for long-term horizon. In the short term, there might be some amount of consolidation, but we should not forget with the RBI moves coming in the last month, these are very big positive for the entire housing finance space.
All right, that's the advice which is coming in from Rajesh. But moving on, next query is for a short-term view. So I will come to you, Lakshmikant, for it. The viewer Shri from Bengaluru is writing that holds 100 shares of BEML at 4,700. Should I add more or to average at the current cost? What will you advise? What is your technical check saying?
This stock has been moving on the in the positive territory with the formations of bullish candle, but in yesterday's sessions it has formed a shooting star kind of pattern. But if we look at the broader structure, so this stock is still trading about all its key moving averages. So I think any dip toward the levels of 4,200 to 4,150 would be the levels from where one can average it out this stock, and once it taken out the levels of 4,900 on the upside, then we could see upside momentum in this stock toward the levels of 55,550 to 5,600, while I think one can keep the stop loss of 4,050 on the downside in case of any correction. So I think the levels of 4,000 to 4,000 4 250 to 440 200 would be the averaging point for this stock.
All right, so that's BEML on the charts, but let's move on to the next counter. This is Balan who's writing in, wants to know is it good to sell or add AB Capital and NTPC? Rajesh, let me come to you for this one. I mean, yes, we have been speaking about the bullish call coming in on AB Capital and NTPC, but what's your view really for the long term? Is it good to add more, or is it time to sell at this juncture?
See, if somebody is looking for a long-term horizon, both are good stocks, I would say. AB Capital has a whole host of products under his belt, be it insurance, mutual funds, everything is in the company. And it has not done anything for the last so many years, I would say. From the last, if I'm not wrong, 6, 7 years, it has done nothing. Despite the fact that the AUM has increased and IAMs have increased, I think one can stay put with AB Capital. As far as NTPC is concerned, is the largest power company with the largest capacity in the country, with the kind of power shortage and everything going on. I think this company is also doing well. If somebody wants to put new money in the NBFC space, I think Jio and Poonawalla are better placed at this point of time for new money to get in.
All right. One more query coming in for lump sum money to be put in, and Murthy from Hyderabad is asking. He has rupees 1 lakh and he has identified few stocks. Amara Raja Batteries, Excites. What should he do, Rajesh? What is your advice?
See, both are very good plays in the OEM space, I would say. Both have good tie-ups with the two-wheelers and four-wheelers companies doing very well. And Excite has gone for expansion also to move into EV. So I think out of these two, Excite is better placed at this point of time. Although Amara is also a good company in not only in OEM but also in replacement market. But at this point of time, on other parameters like valuation and all, and the future prospects of EV, I think Excite is a better company.
Excite would be a better bet. That's the word. Moving on to the next counter, this is Kabita Das, who's writing from Guwahati. She's bought 200 shares of Tech Mahindra at a buying price of 1,715 rupees. She wants to know the future prospects in the short term and what should be the stop loss. Lakshmikant, this is for you.
The Tech Mahindra is looking good on the chart, although it has seen some sort of profit booking after making high of 1,732. But overall structure is still trading in the bullish territory. So we would like to suggest the stop loss of 1,620 on the downside until it hold this level. We could see upside momentum in this stock. While on the moving on the upside, it could face immediate hurdle near the levels of 1,730 to 1,735 zone. But I think once it taken out this level, then bullish momentum could be expected toward the levels of 1,820 to 1,850 zone.
All right, next query coming in from Bengaluru. Venkat Raman A is asking that whether or not he should invest in Bajaj Finance. What will you advise, Rajesh?
So it depends on your time horizon. If you're looking for a short to medium term investment or trading, I think Bajaj Finance is a better bet because it gives a lot of momentum. But if you're looking for a long term horizon, by long term, I mean you want to hold for 12 to 18 months or even higher, then Bajaj Finserv would be a better bet. It's a holding company of Bajaj Finance. Not only Bajaj Finance, it holds uh, uh, in both the insurance ventures. It has a housing finance and under its belt. It has got AMC license. The NIMs of the company itself is doing very well. So I think that's a better company for a long-term horizon. Although both are the same, but on valuation parameters, I think Bajaj Finserv is better.
All right. Moving on to the next counter then. This is Raghavendra Rao, who's writing in from Hyderabad. He's bought 2,000 quantity of GMDC at a buying price of 296. He wants to know if he can hold a book profit at current levels. Lakshmikant, should he be booking profit at this current juncture?
The GMDC has been trending higher and today it has also given consolidation breakout. So I think he should wait for the higher levels. So upcoming resistance is seen near the levels of 430, 438 to 440 zone. I think we could see further upside move toward the levels of 435 to 440. So that would be the zone from where he can book profit. However, he can trail the stop loss toward the levels of 399 on the upside, and as long as it holds this mentioned support, we could see a further upside move toward the levels of 435 to 440 where he can book the profit.
Next query coming in for Trent. The viewer has asked a question that wants expert advice on Trent. Holding 50 shares at buying price of 4,661. Krishna from Bengaluru is asking what should he do. His time horizon is 1 to 2 years. Rajesh, what is your advice?
Very good buying price, I would say. You are sitting on a good amount of profit, but since you are looking for a time horizon of 1 to 2 years, can continue to hold. Company has been doing very well, not only in its premium products, but also with Zudio, it has made a good dent into the uh, mass products, I would say, value products. They have moved into lab diamond, they are moving into beauty products also. And I think going forward, the company is going to do well. Margins are good when compared to other retail chains. So I think for a long-term horizon, one can hold this stock. There might be some amount of consolidation correction because of the recent run-up, but for a long-term horizon, it's a good hold.
A good stock to hold for the long-term perspective. Okay, so that's the word coming around for Trent. Let's move on to the next question. This is Ram Satri, who's writing in from Hyderabad. He's purchased 70 shares of Tata Motors at a buying price of 1,100 rupees. He wants to know if he should be selling it or should he be holding on to these levels. Lakshmikant, what do you see on the charts for Tata Motors?
This stock has seen a downturn after breaking its support levels of 715. But when it reaches toward its 50-week moving average, 20-week moving averages toward the levels of 665, then after we have seen pullback move. So I think he should keep the stop loss of 665 for the pullback move toward the levels of 715. And if it surpasses the levels of 715, then 735 to 740 would be the next upcoming upside move for the Tata Motor, and from where it could face a stiff resistance. So as long as it hold the levels of 665, he can hold this stock and could wait for the mentioned pullback moves on the upside.
Right, that's the advice from our guest regarding Tata Motors. The auto sales numbers, monthly sales numbers are awaited. But next query coming in from a senior citizen, and he has specified a question regarding making shift from BEL. He's saying that he's making 25% profit in BEL and wants to buy Coforge and Apollo Hospital. So what is your advice? Not mentioned the name there, but what will you advise to a senior citizen, Rajesh?
See, I think one can continue to hold BEL. The company has been doing well. Order book is strong. Government's focus on indigenization of defense is a plus factor. And not to forget that these defense pack is getting orders from international source also. So going forward, Bharat Electronics can move to much higher levels from these levels in the coming years, I would say. And as far as investing in Coforge is concerned, I think it should be avoided at this point of time since considering your age. And what was the other one you said?
Yeah, Coforge and Apollo Hospital.
Apollo Hospital, as we discussed, is a good long-term bet. And as the news flow is coming that they are hiving off at their digital presence and the pharmacy business, that's one of the plus point, expanding their bed capacity. Uh, I think healthcare is going to do well, as I have discussed in our show today. So Apollo Hospital is also a good long-term bet. So you can vouch on BEL and Apollo Hospital.
Hold coming in on BEL and Apollo Hospitals, a positive bullish outlook for the healthcare space as well. But moving on to the next counter, this is Shaurya who's writing in from Gurgaon. He says he holds 30 shares of Tata Tech at a buying price of 750 rupees. He wants to know if he should be holding on to it or should he be selling it given level? Will it hit 800 by the end of the year? Lakshmikant, what do you see on the charts for Tata Tech?
The stock of Tata Tech has seen a upside move, but whenever it reaches its previous swing high, so from where it could face hurdle also. So I think he should wait for this upside move whenever it crosses the levels of 720. Although we have seen significant bullish momentum in today's sessions, so I think expected upside move toward the levels of 740 to 750 zone would be the upcoming resistance, and till it to hold above the levels of 690 to 685. So that would be the support for the Tata Tech. So we could expect that in today's session we could see further upside momentum toward the levels of 730 to 745 range.
All right, that's the advice which is coming in for Tata Tech, and Suvina was also asking the same question. Hope your query is answered now. But with this, it's time to thank our experts. Thank you, Rajesh and Lakshmikant, for joining and answering our viewers' query.